China Evergrande may have slipped out of focus in the mainstream media in the last few weeks, but that doesn't mean the situation has been resolved. The risk from a collapse of the Chinese property market is still present. Today, we're going to take a look at where things stand with the heavily indebted Chinese property developer and look at the latest data for our California markets to see if we can spot any early warning signs of a problem heading our way. Let's get into it. China Evergrande is back in the news and not in a good way. The company has reported that contracted sales plummeted 38.7% in 2021 compared to the prior year. This information was so sensitive that trading in their shares in Hong Kong was halted prior to release of the information. Make no mistake, that's a pretty big drop in sales and almost rivals the initial drop in home sales in the US when our last housing bubble popped and sales declined by about 42%. They are still trying to find a way out of the hole they dug themselves into, and the latest efforts have involved trying to revise the payments for the wealth management products they sold as a way to raise funds for further expansion. Their founder and chairman is optimistic for a recovery to take place as they have resumed some construction projects, but they are far from being out of the woods as they have now officially defaulted on at least 2 sets of dollar bonds that were due in November. And although the Chinese government has not stepped in to bail them out, there are signs that they are actively trying to manage the situation and help the indebted company make a soft landing by negotiating with creditors for them. As Evergrande and a long list of other Chinese property developers are signaling a collapse in the Chinese real estate market, we're always on the lookout for fallout that could reach other markets outside of China. Here on this channel, we're looking at how this could spill over specifically into U.S. markets. As mentioned in our first video on the Evergrande Crisis, we're looking at California markets as a sort of canary in the coal mine, given the high concentration of Chinese ownership in California. A real estate collapse in China could trigger sales of U.S. real estate if the Chinese owners needed to raise liquidity. So we're looking at the major California markets in the Bay Area and Southern California to see if there's any signs of this happening. Now, let's take a look at the latest real estate data for the major markets of California to see how things are shaping up on our end. In our last early warning update video, we saw the sale to list price ratio in California markets pointing towards some softening in demand, likely due to affordability issues as prices have surged much faster than incomes in recent years. In the Northern California markets of San Francisco, San Jose, and Oakland metropolitan areas, we're seeing a pause in the downtrend that was forming before, suggesting demand remains robust as homes are still selling well above their list price on average. We are also seeing the same pause in the downtrend in the sales to list ratio in the Southern California metropolitan areas of Los Angeles, San Diego, and Riverside. From a market health perspective, this pause is a good sign as a continued downtrend in the sales to list ratio would signal deteriorating demand in the market. Looking at demand from a different angle, home sales have not broken through their recent highs but still remain well above pre-pandemic levels, confirming the robust demand we're seeing in the sales to list price ratio. So we don't need to worry about a breakdown in the major California markets anytime soon based on what we're seeing in these demand statistics, and especially since the downtrend in the sales to list price ratio has taken a pause. What we need to keep a close eye on now is the supply side of the market. If a large number of Chinese real estate owners in these markets needed to liquidate their assets, we might be able to spot that as an above average increase in new listings. Let's check out the supply data to see if there's any indication of that. Looking at new listings across all property types, what we're seeing across the board is a retreat from recent highs. We're seeing it here in all 3 Bay Area metropolitan areas And we're seeing it in all three major Southern California markets as well. Combine this with the robust demand in the last few months, and this is why we're seeing the month supply of homes in all major California metropolitan areas continue to head lower. So given the strength of demand and the ever-shrinking supply of homes on the market, even if some Chinese owners were trying to dump their properties on the market, they would likely get absorbed very quickly and probably wouldn't even dent the momentum the market currently has. There was some concern in our last update as the sales to list price ratio was declining in almost all major California markets, but given the pause in that downtrend, we're feeling a bit better about California markets at this time. If you're a seller or owner holding onto your property, this is great news. For buyers, however, this isn't the best news. The strong demand and tight supply continues to put upward pressure on prices and unfortunately is pushing many potential buyers out of the market as prices remain near recent highs. That's going to do it for this update on California real estate markets and any potential contagion from the Evergrande situation. Make sure you subscribe for future updates, and we're also going to be doing an update on our analysis of how the overall U.S. economy could be affected by a downturn in China's real estate market as well as their overall economy. We did an inaugural video on that where we laid out our framework on the signs to look for and how it could affect us. If you're watching this on our Real Estate Watch channel, make sure to subscribe to our main channel, PapayaCast, where we have our videos on all other non-real estate content. I'll leave a link to it in the description down below. If you found this episode useful, please give it a thumbs up to support the channel. I appreciate it. Thanks for stopping by. I'll see you in the next video.